The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the Friday 13th edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. Now, the easiest way to do that, well, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstances of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 8 o'clock in the morning. That's right. If you're listening live at 11 o'clock, thanks so much for doing that. We'll try to make the show as pertinent as we can for you. But if you are listening at 8:07, I would love to hear from you. You can always send me an email with a request, steve@tfnn.com. Inside that subject heading, please put radio show question. And, of course, if you're inside our Tiger's Den, which really you should be, then any ping will do. So let's go ahead and get this show started on Fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we begin our day now after the events of last evening with the attack of Israel in Iran. You've sent equity futures lower. You've got the Smitty's trading down 57 points. We're trading down at 59.92. We've been down as low as 59.27. In the case of the NASDAQ, trade out of 21,671. We've been down to 21,471, 200 points lower. We're already down 262 right now. 426 is the downside for the Dow, 30 points for the Russell. Overseas, in Asia last night, every market to the downside. In Europe, every market to the downside. Kind of a clue that maybe our markets will end to the downside today, too. Last night, you had gold really take off. Not unusual there. We even chatted about it just a tad towards the end of yesterday's show. Gold up right now, $43. It's well off its session highs. 34.45 is the print. It's been up at 34.67. Silver really not doing an entire, it did rally up to 36.77, then pulled back. It's now up by 2 pennies out there. Copper is down 10 cents. Natural gas is up 4 pennies out there. So what I want to do here, because I'm recording the show, between 8 and 9, and we're really just dealing with futures markets and trying to understand, what's the message of the markets overall. What I want to do here, I'm going to try this. Now, this is a new, haven't done this here, changing my stream to a different screen. And here we go. It's going to work out just fine. Perfect. So what you should be seeing on your monitor right now is 5 different charts for our international markets, just to get a feel for what they're communicating to you and I. And we'll begin with the Shanghai Index. The Shanghai Index has a TD9 count top. And what we can see here, yesterday, price closed below its green oscillator and change line, 35.52. First thing we know, it's lost momentum to the upside. The next thing we know is where support is at. And the first level of support for the Shanghai is at 34.9761. Now, I'm not saying that price is guaranteed to get down there, but that's where it's going to target should it continue to move lower. We don't have anything here at this stage to suggest otherwise. In the case of the Hang Seng, we discussed this yesterday. It had formed a sell the D point top. It had follow through last night to the downside. It has closed below its green oscillator and change line. Same scenario, lost momentum. Now, it should target its hammer candle from here on the trading day of May the 30th. It'll target that well before it gets down to its breakout level at 21,848. Nikkei 225. It still has a sell the D point top. It's got a wave number 7 top. Price is below its oscillator and change line. Should retrace further, maybe targeting its breakout level at 36,040. But the point here is you've got tops, the daily time frame, the Shanghai Hang Seng, and the Nikkei. Now let's look at the FTSE. The FTSE is going to go ahead and confirm, likely to confirm either a sell the D point top, Rhodes Momentum Indicator top, or a TD9 count top today. Now all price needs to do today in order to form that TD9 count is not close below, which it, at this stage here, not likely to do, but not close below 88.32. And we're at 88.66 right now. So you're going to have a top in the FTSE. How about the DAX? The DAX has a wave number 7, top letter G. I did mention last week, even though we didn't have complete tops in place for all the different time frames, it looked to me like the DAX was getting ready to top. Well, the DAX has not only topped, it's gotten all the way back to its breakout level, which at this point in time is held. That's at 338.89. We got back to this level once before. That was back on May 23rd. Now, we didn't get all the way down there, but we're close enough for Stevie's game out here. But if we do close below 338.89, the DAX is getting ready for the DAX may have made a major all-time high. That's really the point that I was making last week when we were taking a look at it. We can take a look at the DAX charts themselves later. So that's the first set of charts, and it's how I start my day. It's how newsletter subscribers start their day, understanding what's going on across the globe out there. Kind of helpful, or at least I believe it is kind of helpful. One of the next things that we do is we take a look at what's going on in the currency market. Well, here are the 6 currency pairs that make up the U.S. dollar index. Now, we have rolled over into the September contract for the U.S. dollar index. If the U.S. dollar index today forms a bullish reversal candle, which it has, it'll generate a Rhodes Momentum Indicator bottom. Now, what price also needs to do today for the U.S. dollar index is it needs to close above its red oscillator and change line, 97.98. Now, look, I want to make this point to you. This is a really important point. I don't want this to, the really important top point. What do we know about how the markets reacted to wars, to last night? What do we know? Where is the so-called safe haven? Exactly. It's right here in the U.S. dollar. It's right there in Goldilocks. And at this date, and it will eventually come back inside the equity markets. In fact, when we take a look at the equity markets, they may have already bottomed. But let's take one step at a time. Now, with regard to the U.S. dollar index, it closed above that oscillator and change line ought to get it up. This is the September contract up to the 98.84 level. That is the bottom of the daily profile. If we look at the euro very likely today, well, if it forms a bearish reversal candle, it'll confirm a sell the D point top. Now, what it really needs to get downside traction, that would be an upside traction for the U.S. dollar, would be a close below its oscillator and change line. That's at $1.14, 1.14923 if you want to get granular out there. If we take a look at the Japanese yen, it's really kind of been oscillating near its oscillator and change line, not providing us with the clearest piece of information. But so far, that oscillator and change line is holding. If we take a look at the Great British Pound, it will likely form a sell the D point top today. And that should lead to lower price. The Canadian loonie is going to complete a TD9 count bottom pattern. It's going to need to close above 1.363. Doesn't have to do that today, but it's going to need to get closes above that oscillator and change line in order to get upside traction. It should go target the 137 level. The krona and the Swiss franc out there. The krona needs a bullish reversal candle to confirm a Rhodes Momentum Indicator bottom, and bullish reversal candles needed on the Swiss franc in order to generate a buy the D point bottom. So that's what's going on with regard to the currency pairs out there. Again, in wars, in geopolitical conflicts, the U.S. dollar. So anybody out there that's trying to sell you or anybody else that King dollar is dead, is out of their freaking minds. Truly. It's somebody who doesn't really technically look at charts. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstadt's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstadt releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Welcome back, folks. Again, it's 8:18. We're recording the show today between 8 and 9. If you're listening in at the normal time slot, thanks so much for doing that. At this moment in time, we've got U.S. equity futures trading to the downside. You've got the spot fix. That's up $2 right now. It's up 11%. You want to watch that at day's end. If there's a one-day rate of change of a plus 10% out there, we typically will see a bounce or bottom form Sunday evening. Could be early Monday morning out there. So you want to keep an eye on that. That's one of those typical patterns. I mentioned that it's possible that we may have seen a bottom for the day. And what I was referring to, if we take a look at the U.S. equity future contracts, see the daily time frames. Now, yesterday we were looking at new profiles that were attempting to form for all of them. New profiles actually formed inside the NQ and the Russell 2000 yesterday. So let's start with those because those profiles are solid. We take a look at the NQ. The NQ would form today a Rhodes Momentum Indicator top. We've got a bear sash candle out there. However, prices also tested and rejected at this stage of the game at 819 support, which is at 21,611. If at 11.19 we're trading below 21,611, and certainly if we close this session today below that area, we're likely to see a further move lower. Now, the downside target in the NQ, if that were to unfold, would be 29.54. The price is right now trading into its buy zone. So it's a very strong support level, 21,611 to 21,752. We take a look at the Russell 2000, which does have an A to B equals CD pattern to the upside. That has been that's now on pause until we can see whether or not price is able to take out profile resistance. So that A to B equals CD pattern will not resume until you see a close above 21.66 out here. What price did earlier this morning is it got back to 20.81.90. That's the bottom of its profile, and it is held. This will be day number 3 to the downside out there. That means that this should be the low for the Russell 2000 if we're still in a bullish mode. Now, it was the ES and the Dow Equity Future Contract, YM, that did not complete their profiles yesterday. So they have new profiles that are attempting to form today. I have no idea whether these will hold by day's end or not. But we go with the information that we have right now. And what you can visually see is that profile support, in the case of the ES Mini, at 59.71 has been tested and rejected. Inside the Dow Equity Future Contract, it's 42.499. Those would be the numbers that you would pay attention to. If there were closes below those numbers, now the Dow Equity Future future contract does have a confirmed wave number 7 top. That's letter G. The ES Mini today could confirm a Rhodes momentum indicator top if we get a bearish reversal candle. Much like we look at in the NQ, you've got a bearish sash candle going on right now. It doesn't mean anything at 8:20. It means something at 5 o'clock tonight with regard to when the equity future contracts close out there. So 59.71 is the area to watch. 21 for the ES, 21.611 for the NQ, 42.499 for the YM, and 20.8190 for the Russell 2000. So now we go from basically the daily equity future contracts. So I'm going to go ahead and turn this off at the moment. I can always call these back up. The reason I'm turning this off is because I got both systems running, so it's taking up a tremendous amount of my resources. That's not the problem. I like this show to go kind of smooth. Now, we looked at the NQ out there. We looked at all of them, having tested and rejected the bottom of their profile. So the question is, what's going on? What was going on intraday as that was taking place? Well, what you'll see out here is an A to B equals CD pattern. I've drawn it on the 2-hour time frame chart. If it's on the 2-hour time frame chart, it's on the 4-hour, it's on the 5-hour, it's really on all of them. Now, in the case of the 2-hour time frame chart, we had a hammer candle that formed at midnight. We had another hammer candle that formed at 4 a.m. or 2 a.m. And now what price is doing in the NQ, it's targeting this oscillator and change line. The current print on that is at 21,704. Watch that. If price closes above that, that's telling you that the NQ wants to rally up to 21,820. The 4-hour time frame chart, price wants to rally up towards the 2767, 21,793 level. If it closes about 21,793, it tells you that the current rally is more than a counter trend move for its time frame, only its time frame. In the case of the NQ for its 5-hour time frame chart out there, we don't have any kind of a bottom pattern here. We don't have the bullish reversal candles, but you got enough on the other time frames to say, okay, the 5-hour chart, heck, we're trading above the last 5-hour bar. So that's suggesting rally mode. 21,779 is its price target. Now, what's interesting here, it's 8:22. Cash market doesn't open for another hour and 10 minutes. And what I'm looking for is there any topping patterns or signals that might form by then? I would think, and don't go with anything that I think, just go with whatever the charts are telling you, okay? Charts are way better than what Stevie thinks. But I would think that we would see at least some type of push lower in the U.S. markets when the cash indices open. Now, whether they take out those lows of the day, for example, the low of the day out here, those 2 hammer candles on the 120-minute time frame chart, that's an important level. That's at 21,471. If we close below that, odds favor, we're headed to lower price. If we just simply get back and test and reject those areas, well, then you know that the bottom has been put in, at least for right now, for the day. Now, that's what's going on inside the NQ. Let's not stop there. Let's go take a look at what's going on inside the ES Mini. Let's see if we've got any kind of synergy out here. By the way, we had a TD9 count bottom pattern. I don't know if you saw it on the 30-minute time frame chart. That was for the NQ. The reason I bring that up is when we pull up the 30-minute chart here for the ES Mini, you're going to see the same thing. And then you're going to see a hammer candle for it. Now, the ES Mini is the one on the 30-minute time frame chart that could be the one that's giving us the signals. Why? Because we're in bar number 8 right now. That's going to complete at 8:30. Bar number 9 will complete at 9. The bar following bar number 9 will complete at 9:30. So the ES Mini on a 30-minute time frame is the one chart right now at 8:24 that is signaling to us we could see what it was that I was anticipating, instinctively anticipating, that we would at least see a push to the downside. So now it would be nice if you had all 30-minute time frame TD9 count topping patterns, but since I didn't pay attention to that on the NQ, I'm going to try to pull up. No, I don't try to do anything. I either do it or I don't do it. So people, anyways, that's just Stevie's philosophy on people who have like to try something. Do it or don't. I want to pull up the 30-minute equity future contract. So I'm not sure if it's going to show up on this main screen or not. Oh, it is. Perfect. So here, what this will allow us to do is see if, when you've got synergy out there, that's when you see your best tops or bottoms, when we've got all 4 equity future contracts giving us the same signal out here. So what we're looking for here is to see where we at. So on the Dow equity future contract, not going to happen. There's not enough time for a TD9 count pattern. The same thing inside the NQ. So it's really going to be about the Russell and the ES Mini. No synergy here. Now, in the case of the Russell, it's going to go ahead and complete bar number 8 at 8:30, bar number 9. Okay, yeah, so we're in the same setup here. So watch the 30-minute time frame charts for the Russell and the ES Mini. Why? Because they're likely going to have TD9 count tops at 9:30. If price starts trading above their highs, whatever they are, that tells you about a strong upward momentum move that's going on inside the U.S. markets. That really holds along with the picture of when I say when it comes to political uncertainty, when it comes to war-oriented things, especially if boots are not on the ground here in the United States, and they're not out there, and it doesn't matter whether Israel's a proxy for the U.S., just as, Iran's got all their proxy states out there. Where global capital is going to flow us into the U.S. You're seeing it now. The reason why we want to talk about it now is because we really haven't had a shitstorm just yet. Okay, so that could be coming. And when that does come, you want to understand, you want to know, especially when you're not emotionally tied up into it, is where is it that capital is going to flow? And we're seeing it. We're seeing it unfold right here, right now at 8:26 a.m. on Friday the 13th, which Stevie thinks is a lucky day, not an unlucky day. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foresight Fund Services, LLC.
Welcome back, folks. Before we get to a couple of requests that have come in, let's start with the New York Stock Exchange. The advanced decline oscillator, that's normally what we talk about, but what I want to first notify you about is the advanced decline line itself. And yesterday, we were at new all-time highs. So I don't want you to think that the move that we've seen in the U.S. stock market is not real. It's as real as you can get. New all-time high yesterday in the advanced decline line for the New York Stock Exchange. Now, the advanced decline oscillator at least closed above zero yesterday. I don't know where it will end today, but as long as it remains above that zero threshold level, that's panel number 3 that you're looking at from the top. Then conditions are bullish, or at least provides buyers with an edge. And the bottom panel, which really shows the VIX index, a red line out there, which is pretty at 2103, is the 50-day exponential moving average, which was tackled overnight. It was hit overnight, but we're still trading below it. You can see we're trading right now on the spot VIX is 1990. Again, that 50-day exponential moving average, that's the key level to be watching, is going to be at 2103 today. So I certainly wanted to be able to update you on that. Let's get to a couple of requests that have come in. In just a moment, I'm going to go ahead and change the screens. I'm just curious where that's printing at in the pre-market 54.30. Okay, so the first thing we're going to start with, this came in from Robert, and Robert is looking to enter a CRM. So actually, I want to go back, Salesforce Innovation. What we want to do here for Robert is we want to go see where is CRM trading in the pre-market. So I'll type that in on this main screen, and right here, you'll see, 2 shares were traded at 263.50 just a few minutes ago. 14 shares before that, 263.44. So we know where we're trading, the 263-ish level. So as price is pulling back, where does that put us? Well, we closed yesterday at 266. It's trading with inside its bullish structured profile, has a TD9 count bottom pattern, and the buy zone is between 257 and 260. So Robert, we haven't gotten down to the buy zone, but I would say that is your entry point area, anywhere between 257.69 and 260.87. And I would say especially if volume is pulling back with less than 28 million shares, which is that swing point from May 29. If you look at the weekly time frame chart, we talked about how it's printing the 263 and change level. 263.48 is the bottom of its bullish structured weekly profile. So what you'd love to really see it do is punch down to 260.87 or below that, be able to enter at that stage and see it close back above the 263.48 level, the bottom of that bullish structured weekly profile. If price closes below that level out there, it doesn't mean that it's absolutely going to head lower, because you still have that daily TD9 count bottom and its buy zone out there. But if you did close below 257.69, now it's a hammer candle. Look, you've got to take a reasonable size. You got to stop out there, and you need to know the 10-day average on that. What is a 10-day average? Let's help Robert out on this. I can do that by moving over to this set of charts out here. Let's type in CRM, and it's going to give us a 10-day average true range, which is $6.54. So your stop has got to be, I would multiply 654 times 1.618. So that's going to get you to around $10 or so, $11, $10 below where. So if it opens at the 230-ish area, 263, $10 below that, 253. What's the low of that? I'm trying to find out what's the low of that May 29th session, 254.50. Make your stop below that. That's just simply going to reduce the position size out there, but make the stop below that hammer candle. If that's what you're going to do, is take an entry into CRM. Monthly chart has got support at 245.89. So that should help you out with that. You also are interested in considering a long position in Uber. So let's do this here. Let's see if Uber is being hit at all in the pre-market. So we'll get that up on our screen. And, Let me give you the 10-day average true range. Then we'll move over to see where it's trading at. Average 10-day true range, 244. So you want to mark that down on your pad of paper. And then if we see where it's trading, 84.32, closes at 85.62, or it's got a bullish structured profile as well. So let's go take a look at its charts. Its bullish structured profile is between 82.66 and 83.46. The green oscillator change on the weekly time frame is 83.53 out there. That really becomes your zone of entry into a long position. I don't have a topping pattern on the weekly chart. We do have a bottoming pattern, TD9 count. That's the most recent pattern on Uber. That occurred on June the 3rd out there. Price ran into resistance where it did. Where did it run into resistance, Stevie? The oscillator and change line, 87.66. So you know, Robert, that's a key level that price is going to need to close above in order to really gain some upside traction. Uber also would then have resistance at 91.04. So your better entry on this is between the 82.66, 83.46 as it gets towards that TD9 count bottom pattern, and you'd love to see it do with less than 25 million shares out there. The weekly time frame, if price were to close below 83.53, it has a buy zone between 77.12 and 80.41. That's not going to come into play unless you see price get below that TD9 count bottom. That's at 81.86, in which case it would trigger an A to B equals CD pattern to the downside. I am not saying that's what's going to unfold. I'm saying you have to be able to take a look at two sides of the trade out there, and those are the two sides. The weekly or the monthly time frame chart does have a Rhodes momentum indicator top, but so far price remains above profile resistance and its oscillator and change line. So the monthly chart is neutral out there. The daily chart is bullish, except for the fact that it continues to find resistance at 87.66. So I think I like CRM better than Uber out there, but you had a third one for us to look at, which was Airbnb. So let's go ahead and pull it up on our screen. Let me also go ahead and repopulate the screen with the so we can see where it's trading. First, let's see where Airbnb is trading at. Last trade firing off at 135.82. Now that is below profile support. Let me also get the average, a 10-day average true range for A, B, and B out here, so we can give that to you. That is at $3.60. Now let's go to the white background charts. And on Airbnb, so it was trading below the bottom of its daily profile. It's got a TD9 count and Rhodes momentum indicator top. This suggests to you, Robert, especially if it closed below 136.33, that price wants to make its way back to its breakout level at 125. If you look at the weekly time frame chart, it does not have a top. Not yet. And price remains above profile support, which is 132.99. If price were to get below that, it could be targeting its oscillator and change line, and that right now is in the 128 level. Monthly time frame chart, nothing more than a consolidation. So of the three, Airbnb is one that you need to put on your list to keep watching, because I don't think that turns into a bottom to about 145. CRM is one you can start to consider and watch today. Maybe you get that, you're able to get that fired off today. And Uber, I gave the information that I can use that to make a decision. I don't have a decision on that, but use that information to make your decision. And I hope that helps. So that was for Robert. Next thing we're going to look at, we get back to this break, folks, we're going to look at the gold contract intraday. Ron R. wants to know, is it time to go long or short? Tom G. wants to look at the GDX and Lightspeed crude, so we'll do that and anything else that you want as well. Send me an email, steve@tfnn.com, or any ping inside the Tiger's Den. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. 8:42 in the morning. We're going to start taking the gold complex out here. Here's one thing that we know. Now, this set of charts shows you how gold is trading in the major currencies out there. And what we know is that gold has not made a major all-time high. How do we know that, Stevie? Because right now, gold is trading at a new all-time high in yen. And that is not how gold makes new all-time highs. It doesn't make it in another foreign currency first and not in the U.S. dollar index. So we're going to see new all-time highs. Now, whether we're going to see new all-time highs the next day, 2, 5 weeks, 10 weeks, how many are, we're going to see new all-time highs. That's the first point that I want. That's the only currency, by the way, that we are trading at new all-time highs. If we take a look at gold price in the Middle Eastern currencies, we can see that we are breaking through descending trend lines out there. We are close to a new all-time high, not a surprise here. In Iranian rial out there, we're getting close. In Israeli shekels, not as close, though, as we are on the Iranian side of life out there. So it's good to understand now. So we haven't taken out the prior highs out there, except in terms of the yen. If we take a look at what's going on with regard to horizontal and diagonal trading ranges, this is the weekly time frame chart. The white diagonal lines out there, those are longer term periods. The yellow one, obviously, you can see is a shorter term period with inside that. So you've got real strong resistance up around the 35.50 level. That's both a rising price channel line, and that is a weekly horizontal trading range boundary line, 35.50, 60. So that could be an upside target for you. Now let's go from this set of gold charts to the intraday charts. And this really was the question that Ron R. posed this morning, which is intraday long or short. It's really an interesting question out there. It's really tough to go short gold, except from an intraday standpoint, because you've got some good signals. So what signals do we have? Well, if we take a look at the 4-hour time frame chart, let's start with the largest topping signals that we might see out here, and that's going to come from the 4-hour time frame chart. It has a TD9 count top that has completed. But Ron, not until price is trading above its green oscillator and changed on the top of its profile. That says that its signal is neutral. Now, it closed above that TD9 count top. That's at 34.67. Then we should continue to rally. The 2-hour time frame chart has a sell the D point top. It's got that same high to contend with. That's at the 34.67 level. But even here, after forming a top, including a wave number 7 top that I see out there. Price pulled back, test and reject that green oscillator and change line. In other words, its signal is bullish to neutral on the 4-hour time frame chart. Very important to have an idea of what's going on perhaps a larger picture. So let's say that you were interested in the 60-minute time frame chart. Well, it formed a TD9 count top. It did it at 1 o'clock in the morning, pulled back basically to support, and support was the bottom of its profile. It didn't get all the way down there. It got down to a low this morning of 34.28. 34.26 is the bottom of that 60-minute profile. So even though you've got a TD9 count top, you got a consolidation, tough to say to go short, right? We haven't busted through any key support levels. If you look at the 30-minute time frame chart, it has a sell the deep point top. It formed a TD9 count bottom. So that's cool because now we've got a very clear bottom signal out here. That bottom formed at 3 o'clock this morning, 3:30 this morning. Really completed by 4. And so that low is really important, 34.28.30. Now, that has led to a rally right up into TD9 count breakdown resistance at 34.53.80. So now you're really in between no zone, right? You've got support is held, resistance is held. We don't know which one is going to give way. The 15-minute has resistance as well at that 34.50. It's got at 34.54.60, so close to where the 30-minute is at. I've got a TD9 count top on a 10-minute time frame chart that is completing. So try to answer his question, Stevie. Long or short out here. Ron, I have a real tough time telling you to go short. Really tough time, even though we've got all kinds of intraday topping signals out there, but the push is lower, found support, and you had that TD9 count bottom pattern. And as I said on the 30-minute chart, you're in a no-go zone out here. No-go to the upside, no-go to the downside. Why would I have you buy resistance when we're trading into it? Wouldn't do that. Why would I have you sell at this stage here? Would have you sell because of what's going on as we've seen on the 4-hour charts and the 2-hour charts. I hope that makes sense, but you make the decision that's right for you. I've at least provided you with the patterns, at least, that are in play at this moment in time. So now let's kind of move from gold over to the GDX, which is the question really coming in from Tom G. So let's see, did I put the GDX right here? No, I didn't. I put the GDX down a little bit lower. I'm hoping that this is where they're at. There we go. So now, in the case of the GDX, the last trade that I looked at fired off at 54.39. It may be firing off at something different right now, but 54.39 is still below its high, that high being 54.62. If we look at why is that high important? Because of the weekly Rhodes momentum indicator top that's out there, that bearish shooting star candle. So if price is able to close about 54.62, Tom, then the move would be to the upside. I think you're looking from an intraday standpoint. I wasn't certain when I looked at the email. Monthly chart for the GDX is simply all out bullish. The weekly chart's got that Rhodes momentum indicator top, gets to all out bullish for the close about 54.62. And I would say really the same thing on the daily time frame chart. Now, what we don't know about the daily, it's trading at 54.39 or so. The volume on that swing point from back on June 5th is 28 million shares. So watch the volume during the day. Again, I'm recording this show. It's 8:48 in the morning. So don't know what it's going to be trading, what volume is going to look like at 11:48. But now you have a gauge as to, you've got a price point to look at, 54.62, and you've got a volume piece to look at, which is 28 million shares, call it 29 million shares on that GDX. But you start trading it, close about 54.62, GDX is running to the upside out there. So I hope that helps you out there, Tom, and everybody else. Tom also wanted to take a look at light sweet crude. So that's an interesting thing for us to go take a look at as well. Let's get these intraday charts here fired up because I think it may surprise you what light sweet crude is telling us, or at least as we're taking, this is the July contract right now. So let's take a look at the July contract, light sweet crude. Now, what you're going to see as this populates on the daily time frame is a TD9 count pattern that's completing today. Can you believe it? I can't. Now, here's the beauty of this. If light sweet crude is just going to rally the heck out of itself, well, what we need to see is a close above today's high. Now, the day's high is not, I don't know if today's high is in or not. I think that it is, but let's go take a look at it. So today's high right now for light sweet crude is at 77.62. Why might it be in? Well, first, if you look at the 5-hour time frame chart, you're going to see the A to B equals CD patterns that are out there. So they're there for every time frame. So now what we know we've got here is a buy the D point, sell the D point top that formed out here at 4 o'clock this morning with that dark cloud cover candle. What price needs to do, though, is get below that oscillator and change line. So its signal is neutral. Got a top, but it's neutral. Close below 70.43, different setup. Top with a shooting star in the 4-hour time frame chart. Where's price got to get below? At least 71.13. Shooting star on the 2-hour time frame chart. Where's price got to get below? 72.51. So we've got just kind of like gold. We've got tops out here for these time frames, but we haven't gotten the confirmation that we're going to see any kind of traction to the upside. Those signals are neutral, but you can go across the board here. You've got sell the D point or Rhodes momentum indicator tops for everything. The 10-minute chart's got a TD9 count bottom with price dealing with resistance between 74.08 and 74.38. Those are the levels to watch. You close above that, we should see a further rally. We'll be right back.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Welcome back, folks. We'll take a look at ticker symbol IBRX. This is for D1, I think it is, inside the Tiger's Den. So IBRX on a daily time frame completed a TD9 count top yesterday. The top formed on bar number 8 on June the 10th. At the moment, the last trade that I saw fire off was at 306. 306 is just 2 pennies below the bottom of its daily profile. The key number to watch here is going to be that green oscillator and change. Now, that's currently printed at 302. That number is going to drop as price drops. But if price closes below that green oscillator and change line, it is highly highly suggestive of a further retracement with a price target of 250. If you look at the weekly time frame chart, IBRX rallied right up into its TD9 count breakdown resistance level at 351, so that supports the idea of lower price, as does the monthly time frame, which ran into resistance at 346, the bottom of its profile. So watch that green oscillator and change line. If price closes below that, you should expect and anticipate lower price. Now, today will be day number 4 to the downside. So if it's day number 4 to the downside and 302 in essence holds as support out there, that's your entry point, quite frankly, into IB, or an entry point or a place to add to a position inside of IBRX. If we take a look at the next request out here for D1, it was AQST. AQST's last trade that I saw fired off at 324. 324 is the oscillator and change line on the daily time frame. It has a TD9 count top. That TD9 count top went ahead and formed on June the 6th out there. So how important is 324? Mucho grande important. Why? Because if price closes below that, it will also be below, it'll also get back inside its weekly profile if it closes below 328. And that would say last week's move was a false breakout, and that would suggest lower price. Now, lower price here on the daily time frame is $2.38. Lower price on the weekly time frame support, or the buy zone, is between 280 and 292. So that's what I see when we take a look at AQST. Folks, thanks so much for joining me on a fabulous, fantastic Friday the 13th. Stay tuned. Basil Chapman is up next. He's filling in for Tommy for the next for that next hour, and then his hour from 10 to 11. My show here will be recorded, and have a fabulous Friday, wonderful weekend, and I'll see you on magnificent, marvelous Monday. Take care and be safe out there.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.